Did you know that gold prices have gone up by over 50% in last 1 year? And as we speak today, in Mumbai, it's around 48,800 and it may even go above 50,000 before this video gets launched. Sounds amazing, isn't it? So let's talk today about one of the ways in which you can invest in gold, that is sovereign gold bonds. Hello and welcome to my channel Stories and Fundas of Life and Finances. In this channel, you get to know about investments, savings, spendings, and in general how to keep a track of your money. So before we get started, I will request you all to please subscribe to my channel so that I am able to reach the 100 subscribers mark as soon as possible, so that the name of the channel comes in the link and you are able to access the channel in a faster way. Well, there are many ways to invest in gold, but today we are going to discuss one of the several ways which are there. You can invest in golds in form of physical gold, which comes in form of coins or bars. Also, you can invest in gold mutual funds, gold ETFs, digital gold, and also something called sovereign gold bonds. I'm not going to talk about all of these options today. I'll only concentrate on sovereign gold bonds. If you want me to speak about the other options, the pros and cons of them, please write down in the comments so that I get to know and I make a separate video on that topic. Sovereign gold bonds, as we know it today, were started in 2018 and they are guided presently by the circular by the RBI, which came on 4th of February 2019. Basically, the sovereign gold bonds, they are issued on behalf of the government by RBI. They can be taken either in demat form or in non-demat form. However, the demat form is more popular because it allows you to buy and sell the bonds in the stock market whenever you wish to. Let me tell you some of the salient features of the bond. The bonds can be purchased from a scheduled commercial bank, a private bank or a public sector bank, from post office, from Stock Holding Corporation of India Limited, or from BSE or NSE. A person or an institution can buy a minimum of 1 gram of gold and it goes on till 4 kgs in case of individuals and till 20 kgs in case of trusts, universities or charitable institutions. However, please note this is a per year cap. So next year the person or the institution can buy further gold bonds. Presently the government has come up with 6 issues which will come every month from April to September. The next issue will be available from 8th to 12th June and will be given to the public of 16th of June. So at what price do you get the gold? Well, the price is calculated by taking an average of the 3 days of the previous week of which the gold bond is introduced in the market. So at this price, the government calculates and tells you in advance that this is the price at which you will be offered the gold. However, if you are taking the gold by digital means, you will get a discount of 50 rupees. The holding period of the gold bond is 5 to 8 years. After 8 years, the redemption happens and you get the amount of money pertaining to that much quantity of gold for which you had purchased the bonds. This is again calculated as per the 3 days average at the time of the bond redemption. That amount comes directly into your account. However, if you want to sell the gold before the completion of 8 years, you can do so after 5 years completion through a bank or financial institution dealing in sovereign gold bonds at that point of time. However, if you want to sell the gold before the completion of 5 years, it is very difficult because you can only sell the gold on BSE and NSE, where the liquidity is very low and depends on how much people are wanting to buy or sell the gold bonds at that time. One benefit of these bonds is that you get an interest of 2.5% per annum, which is paid to you every 6 months. So not only do you earn the capital appreciation on the price of gold, but also you get an interest every 6 months to your account. You can purchase these bonds using cash up to 20,000, using check, using demand draft, or by online means. However, in the present situation, it's better to purchase this online because you get a discount of 50 rupees as well, and due to the lockdown, it's difficult to go anywhere. Let me tell you some of the other features of the bond. When buying, you need to apply with a PAN card so that your KYC is fully completed. Other than that, I would like to tell you that joint allotment is allowed. However, the total amount is added to the first account holder when calculating the limit for the year. You can even apply it for a minor. You also have nomination facility where you can nominate someone. However, I would like to tell the NRIs that repatriation of the gold bond amount is not allowed. Also, if you are going for redemption of the bonds between the time period of 5 years to 8 years, you should tell your financial institution at least 30 days before the coupon payment date. Wow, so much information. So let's break it down into chunks. Now let's talk about the positives and negatives of the bond. The positive, as you can see, you can buy it online. You don't have to worry about its safety. You get a return of 2.5% per annum paid on a 6 monthly basis. Also, there is no tax. You don't have to pay any tax on this. After 8 years, there is no tax applicable on the benefits which you have incurred. However, if you are selling it before the completion of 8 years, you have to pay a capital gains tax. So here is a product wherein you participate in the capital appreciation, you get the interest, and also you don't have to pay any tax. It's a great thing, isn't it? Additionally, you don't have to worry about its purity, keeping it safe, or any making charges which you might have incurred in physical gold. So I think it's a great product, and many of the financial advisors advise you to invest in gold by this way so that you save on charges and also don't have to worry about it. Talking about the negatives, I can think of only two things. One, it is not very liquid, so selling before the completion of 5 years will be very difficult for you. Secondly, in a case where the gold prices suddenly drop down, so there is a chance of capital depreciation. However, looking at the past, it's very unlikely scenario, but still it remains a chance. Today's story of the day. Did you know that the chemical formula for gold is AU? The full form of that is Augustum. You didn't know it? Well, now you know it. I hope you liked this video. We are there on Facebook, Twitter and Instagram as well, the links of which you can see here. So if you want a regular update of financial products coming your way, please subscribe these links as well, wherein you will be able to get daily financial tips and tricks. So if you think this video was quite informative, please like this video, share it with your friends, and please subscribe to my channel so that I can reach the 100-figure mark. And I am inspired to keep bringing you such content which will be beneficial for you. Signing off now. May you all have a nice week ahead. Take care of yourself. Bye-bye.